Well, it's official. Canada has entered into the R word, a recession. And in today's video, what I'm going to do is we're going to take a deep dive behind the headlines, and we're also going to share why this is an important number for real estate investors to follow, and also going to take a deep dive into an incredible opportunity that this may share for you as well. All right, gang, so let's cue up the slides here. Got an entire presentation deck all queued up for us here to do a deep dive into it. Now, one of the things I'm just going to give the cat out of the bag right off the hop. You know, Canada, the headline is Canada entered a recession, but interesting to note is Alberta, the provincial government and the GDP of Alberta actually just raised its forecast. So that's an incredible distinction to understand. And we're going to dive a little bit deeper into behind the scenes of all those numbers as well, and why it's important to you for real estate investors. The first thing I'm going to share with you is number one is why is GDP? Why is the number GDP a very important number to dive into? What I consider for GDP is truly it's the gateway. It's the gateway number. It's that number that leads to everything. It's the number that leads to what happens with that is, you know, it's the upstream, it's the signal, right? It drives interest rate decisions. It drives lenders' appetite. It's job creation. It's migration. It's rent numbers. Tell you what, if you read that wrong, everything becomes a little bit of a challenge. But I tell you what, if you read it right and you invest based upon the wave forming in the positive direction, that is the number you want to follow. So as real estate investors, that gateway, that first number that you need to get shored up is you need to understand where the GDP is going, where the economic output of the region. And more importantly than just where the number is in and of itself, how does the number where you're investing compared to a national number or even to an international number going forward from there? So let's just dig into it. Let's dig into some of the numbers. So right now we've had, the last three quarters. So technically a recession is when you have two quarters, back-to-back quarters that enter into negative growth. So on this chart, you can clearly see that there's been positive growth, and then there's also been three negative quarters over the past year. So I would probably hazard to say number one is that for the most part, this recession, and I'm going to use air quotes here, this technical recession that we're in right now is not going to last very long. As a matter of fact, some of the early numbers that have come out of from the Bank of Canada, and especially with the latest job report number that just came out here as well, is that we're already out of it. Okay, so but largely speaking, now I'm just going to sit here and just go a little bit more from speak to you from the heart here a little bit is, I know technically we might be in a recession, right? However, I would hazard a guess, and based upon my opinion, and probably based upon what you're feeling as well, is I would bet for the better part of a decade. We truly have been limping along. The economic output, the GDP of Canada in general has truly just been limping along. Wages haven't kept up. It's just feeling like this. You sit there, you go to the grocery store, and two little bags of groceries is, $75, and you go out for, a hamburger and something like that, and you're spending $50 for a meal. It just seems like we're getting pinched and squeezed from every single direction. And you know what? Canadians are getting a little tired of it. And when we see this thing and we hear the banter around about, we're in a technical recession and things like that. So just take it with a grain of salt a little bit here as well. All right. So moving along, one of the things I want to do is, as I mentioned, it truly is, it is a recession. It is the R word, right? And there's an awful lot of people using it as a political football out there right now, of just sharing that, they're using it for political points and things like that. Now, don't get me wrong. Sometimes you got to do what you got to do to get elected. But at the same time, this is a serious situation. I'm hearing an awful lot of a couple things. I'm hearing an awful lot of people sitting here and either justifying it or diminishing it or blowing it out of proportion, right? So it really is something that people just use this whole word of recession as a political football. So just the key thing you want to do is just always calmly step back, take a big, giant, deep breath in, and then take a big, giant, deep breath out, and then always have some perspective on what you're doing here as well. So what I'm going to do is I'm going to dig really deep into this analysis, and I'm going to share with you some of the research that I'm sharing. And then also I'm going to show with you some of the market that I like to invest in, which I think every Canadian should be looking to invest in for real estate as well. Is there truly is a shining star within the Canadian provinces out there. So you might want to just definitely take a look at it. So this one here really is one of the biggest tells that I see is really, while the country is stalling, Alberta truly isn't. Now I see on this slide, I do have on one of them, I have two numbers, if you will. Two numbers of why the Alberta marketplace here. So here's the number from there. The original number of 1.8% GDP growth in Alberta is the original forecast that the government provided. The 2.7 number, and this is for 2026 going forward, is what ATB, the Alberta Treasury Branch, just revised their forecast. So here's the thing, that the message I want to get across, and if you don't remember anything I talked to you about after this video, is Canada is actually downsizing its GDP output number. Alberta is actually growing it. It's actually raising it. And I think they have a bunch of buffer built in there as well. And it truly is, it's forecasted to lead the country, right? The province of Alberta. So number one is, this is the GDP forecast for last year. Right? It hasn't been finalized yet. Then the forecast for 2026, which I believe is actually going to be understated after the years come in, and then also 2027 going forward. And this is the number that you want to forecast and you want to look into, because you always want to invest in a market with a future, not with a past. And right now, the Alberta marketplace is that future marketplace right now. And then, as mentioned earlier, ATB has actually revised its forecast upwards. It's now talking about a 2.7% GDP growth this coming year as well. Now, of importance to note is the following: I know earlier in this year when Alberta delivered their budget, and there was an awful lot of political footballs being bantered around that. It was talking about it was going to actually have a deficit for the first time in quite a while. And it was also, everybody was all up in arms like that. And it was true. It was they were forecasting, I believe the number was about $2 billion forecast. I believe. I could have to check that number. But remember, the one thing that was done on that is that forecast was done on a $60 barrel of oil. Right now, analysts are saying that number could turn into a $15 billion swing. It could turn in from now the memory's coming back to me. I think it was a 6 or an 8%, or $6 or $8 billion deficit. And now that swing could turn it into a significant positive. So that's one thing to look at. And all those things is what drives social spending programs. That drives the spending on healthcare. That drives the spending on teacher salaries. That drives all those things like that. And remember, that was done on a $60 barrel of oil, and the Alberta government has not revised this based upon since the disruption of the Strait of Hormuz has happened. And here's the interesting note is literally for every dollar of change of the oil price, it adds about $700 million in upswing to the GDP, to the budget to the budget number with that. So it's a very important thing for you to take a look at and measure. All right. So couple that. Now, I may sound like I'm a cheerleader for Alberta. Rah, 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 sis, scoomba, give me an Alberta. Right? I don't live there, right? But I do invest there. And I do invest based on fundamentals. And I'm agnostic truly to where I invest or where you invest, but the numbers. You need to really dive deep into the numbers and make sure the numbers align for what you're doing, right? That is what's going to be the fuel for your financial future, is finding out where those numbers are aligned for you and your investment opportunity. Okay, so let's take a look at this. So now when you factor in layer over top of this, now FYI, this research and this was done by the Fraser Institute, and a lot of people, will sit there and go that Fraser Institute is a right-wing research company, but the numbers don't lie. And these were the numbers that came out. By province, it's total debt load per GDP. And that's what I was talking about, is right now, Alberta is at a 43.4% debt load per GDP, and then every other province is associated there. Now, here's the interesting thing, is if you factor out the national debt number from this number, the provincial load only is about 10%. Think about that for a second, where every other province is running upwards of, what is Manitoba? Upwards of almost 100%. And then when you factor out all the federal portion of this as well, Alberta's debt load is only about 10% of its GDP, of its debt load. So just like any good budget, when you're doing, if you're spending a whole bunch of money paying down and paying interest on debt, you have less money to spend on programs and social programs. So that's one of the things that Alberta has tremendously going for them. The other thing that Alberta has significantly going for is people are voting. People are voting with moving trucks. They're voting with their feet. They're voting with packing up boxes and moving across the countries. For the last 14 quarters, Alberta has been the #1 province for interprovincial migration, with Edmonton being the #1 in the country for interprovincial migration. And they're projecting about 24,000 net new people to the area in the next year. So people are voting with their moving trucks. Now, here's the thing I want to share with you as well, is make sure you follow people. Make sure you follow where the people are moving. Make sure you follow where that is, because at the end of the day, this real estate game is a game of people. It's a study of GDP. It's a study of population growth. It's a study of jobs. It's a study of housing supply versus demand versus supply. And here's the cool thing I'm going to do is, this is just part 1 of a 12-part series that I'm going to deliver here for you. It's quick backstory. So I was sitting there and I was pulling together a whole bunch of research for my investment partners, research for people that follow my channel and follow my information of what they're doing. And I just started going down one rabbit hole, which then led into another rabbit hole. And it just kept getting deeper and deeper and growing and growing and growing and growing. And I'm sitting there going, geez, I've got an entire book here almost that I could publish into one report. And I've said, we can't do that. We can't just bombard people with one big giant report. So what I'm doing over the course of at least 12, I've got 12 videos planned on my hard drive sitting right here. I'm looking at it right in front of me here. I got 12 videos planned that we're going to do this one by one. So the point I'm trying to say is, whenever you're watching this one, make sure you're fully subscribed, dive deep into this, because this truly is just one chapter of 12 or more of an ongoing novel. All right, so let's dive back in here as well. Okay, so just the one thing you want to do at the same time is always, just because GDP is growing, just because people are moving in, just because the population trend is positive, just because jobs are being created, just because all those things are happening, number one is you need to always do your homework. But then at the same time, you also need to strongly underwrite the deal. There's a pendulum that goes one way and then another. Right now, I believe, and you will see through this series of videos and presentations I'm about to deliver, the pendulum went way too far one direction, okay? Then the pendulum is swung way too far back the other direction. However, the one thing I'm seeing is Alberta still has a fantastic opportunity ahead of it. I personally believe right now, based upon what I'm seeing, and you will see throughout this series, is the Alberta market is taking a very much needed breather. It's taking a breather from running way too hot too quick. It played catch up. Okay. And there's an awful lot of things that people talk about that there's way too much supply came on board. Just wait till you see that chapter. I was blown away by the research when I did that about the amount of housing supply that's coming on board versus what's actually being built. And that one will just absolutely, it shocked me. And I'm in this market every single day. So point I'm trying to say is follow the story. Follow the trail, follow the facts, and make sure you're making your decision based on facts, not emotions, and then govern yourself accordingly with the action you need to take. All right, so that's the thing I'll share is the market is swinging in both directions. Okay, so, but the key thing I want to share with you is a lot of what you're going to be seeing is you're going to be seeing national numbers. You're going to be seeing the big giant headlines. You're going to be seeing a lot of people talk it down. What I'm encouraging each and every one of you to do is to take a step back and then take 3 steps deeper. What's behind this? What's the opportunity? What is happening that's not being said? One of an early mentor of mine once told me is, it's not just a matter of what the market is doing. It's what is this market good for? Like, what is the market good for right now? I firmly believe right now is a time during a breather part of a phase of a cycle that this is an opportunity to get in, grab a couple really good assets, and move forward accordingly. That's what we're doing. That's one of the things we're doing. We're constantly looking at new land positions. We're constantly looking at more opportunities. So I encourage you during this time of breather. It's an interesting thing to note. Let me just share something here with you. It's interesting time. The time as follows is sometimes when the market is going hot and it's going out of control upwards and everything is going gangbusters that everybody wants to get in. All of a sudden, maybe the market takes a little bit of a plateau, takes a breather, then everybody's going, whoa down here a little bit. Now, it's human nature. It truly is human nature. And I don't discount and don't disagree that that's probably the right answer for you. But here's the thing I want to share with you. Take that step back. Look at things from a bigger picture. Look at things from a big, giant macro perspective. Look at the fundamentals. Where are they pointing? Because a lot of these real estate assets that we're buying, these are going to be long-term assets. These are going to be assets that you're going to own for 10, 20 years. So look down the road. Look out further. Real estate is not a game like day trading. It's not to follow it literally every single day, but there are some really big macro pieces that are lining up that you need to take a look at going forward. All right, gang. What I'm going to share with you before we head off here is, like I mentioned before, there's going to be a tremendous amount of more presentations that are upcoming. Make sure you are subscribed to the channel. We're just getting rolling. The channel is being refreshed. We've done an entire new redo on the channel as well. And you're going to love what we're talking about here. Okay. So, but the last thing I want to leave you with is one final message. Is the following, is if you are interested in moving forward, if you would like to have some guidance, would you like to have some support, or maybe you're just struggling with what your next step is, I'm here to help. I can help you. I've got more than 25 years of experience of seeing all market conditions. And if you are very interested in taking the next step that's right for you, within the notes below, within the show notes or the description below, there will be a link that you can book a time and book a spot for a consultation, a private, one-on-one, judgment-free consultation with what you are trying to do. And I'm always blown away by how much value gets now. I sound like I'm being biased here, but I am. But it's truly from the people that after had this conversation about how much value they have get for this for just a 40-minute consultation. If you're prepared, we go full in and we go hardcore for this. Okay, gang, stay tuned for the next one. And if you're interested, depending on when you're watching this, there should be another video posted over here or over here, whichever way it comes out, of the next part of the series. Do a deep dive in, take a step back, focus on the long-term fundamentals, and we'll see you soon. Bye for now.